Hello everyone and Happy New Year. I wanted to welcome you to my January 2024 real estate market update. Let's get jumping right into it quickly. It's going to be a quick update as a lot of the stats have been from December, which is typically a pretty slow month. But let's get there and show you what's happened in the last month nonetheless and some forecasting for this year. So on my table, if you look at the sales activity for detached year over year, we are up in activity for detached houses, Greater Vancouver, by 1.3%. The benchmark price is up 7.7%. Now, remember that's exactly 1 year back for detached. And last month, a drop of just under 1%, not unexpected. Attached townhomes and half duplexes, activity is up year over year, 7.2%, and the benchmark price is up 6.4% for townhomes, half duplexes, and prices are down from last month by 1.8%. Again, expected over December. And attached apartment condos, activities up 2.4% year over year. Prices are up 5.6% year over year, and a drop last month of 1.5%. So that trend of prices softening has continued last month. Again, completely expected, but things are about to change. So watch what happens as this year unfolds. So let's look at specific product, what's hot and what's not. Of course, we look at the sales ratio, which basically is just the absorption rate of product on a month-by-month basis. If less than 11% of the existing inventory is sold in a month, we are in a buyer's market. There's downward pressure on prices. If between 12 and 20% is sold, we're in a balanced market. Doesn't favor the buyers or the sellers. And if we're in a heated market, over 21% of the given inventory on a month is sold, we're in a seller's market, upward pressure on pricing. So let's look at the specific product. Let's look at detached houses, Vancouver West Side to begin with. So last month we had 10%. It was fairly consistent from last summer. What do we have this month? For new activity on detached houses West Side, we're actually at 9%. So again, December, very, very slow month, cyclically throughout the year. So not unexpected 9%. We're in a buyer's market for houses. So that's good news for those people waiting to jump into the housing market. Actually, it's interesting. Just over the last couple of weeks, we sold a few houses. So there are people sort of waiting to take advantage of the best time to buy. Are we at that sort of bottom end of the market, that trough of the market for houses where people are getting the best prices they're going to see for a while? I think that is the case because I think we're going to have a very, very busy new year and spring. So we'll get into the forecasting in a bit. Condos, townhomes, West Side. Last month we were at a very well balanced 17%. And this month, bringing that in, we are actually at the same 17% for the West Side attached condos and townhomes. And that is, of course, well into a balanced market. Still a healthy turnover of product over December. And if we look at condos, townhomes downtown, which we separate out, we were at 12% balanced last month. This month we're at 15%. So we actually saw some good activity downtown and some inventory clearing out. And that is, of course, still in a balanced market. Now, if we pop over to the east side detached houses, that's interesting. We were at 12% last month, and this month we've actually jumped up to 15%. So as I was mentioning, we had a bit of a flurry of activity on some detached houses, mainly entry-level and land value sales, up in activity at 15%, but still in a balanced market. So pretty healthy month. If we look at east side condos and townhomes attached, we were at very busy 19% the month before. This month we're at 22%. So that's interesting. The east side actually jumped into a seller's market. Surprise, surprise. In December. That's a first. So if we look at overall West Side, all the product, the sales ratios for everything, you can see how they've dipped down from last March, April. most into a balanced market, detached into a buyer's market. If we look at the east side, we're seeing the same trend, a little bit more active, only because of price point on the east side. We're seeing them mostly in that balanced market territory. And of course, the detached jumped into the seller's market. That graph needs to get updated by the board. So if we look at all of BC market conditions, we can see that pretty well the whole province is in a balanced market, or some product getting into a buyer's market, but all product bundled together for the entire province has been pretty quiet. Again, from that last peak in spring, you can see where we are. And if we look at the suburbs, break those out in the lower mainland for detached product, all the municipalities in red show a decreased sales activity, and all the areas in green had an increased sales activity. So pretty even spread, but we're starting to see further out, you can see the trend is that activity has picked up again. Price point, that's detached. If we look at attached for the lower mainland, we can see predominantly increased activity. Again, price point, that lower end price point is getting busy again, and we saw that over the last month. So that's not unexpected, and a really good sign for the way things are going, getting into the new year. We're getting that pent-up demand. People are ready to pounce into the market, take advantage of some really good value purchases in the anticipation of those rates coming down. So let's talk about prices quickly. The average price throughout BC for all product, you can see we had that peak in 2022, and then the peak at this past year in spring, and now the prices have kind of leveled off. And if we look at the average price graph for Greater Vancouver, you can see houses, again, we've had that peak last year in spring, and then now that pricing is a little bit down, but attached, we're seeing a little bit of a jump. Condos pretty consistent over the last several months, so no big changes there. It's mainly houses where we saw that big drop, why we're seeing that activity for investors getting in. So what's going to happen this year? So this is really interesting. If we look at the drivers, not a lot changed from my last update. The price enhancers in green, market price deterrence in red, and transitioning drivers in that orange color. Consumer demand and buyer confidence, or consumer confidence and buyer demand, however you want to bundle it up, is gearing up for a busy year. People have been waiting to buy. People have been waiting to sell. There's a whole bunch of activity that's been held back. That's about to be let loose. Why? Because there's that talk of those rates coming down. Rates have had such a big impact on our market, of course tied in with inflation, etc. And so that's transitioning. If you look at inflation, that's green. That's actually a market enhancer. You'll see the inflation stats coming up quickly, but inflation has decreased substantially. The economy slowed. It's all good news for the Bank of Canada, which is why they're coming out with very optimistic announcements. And the cost of borrowing is still red because the rates are at an all-time high, but that light at the end of the tunnel of the rates coming down is there. So it could turn orange very, very quickly. We'll talk about that a little bit later. Inventory levels are down and dropping last month. Again, totally normal for December. Very few people list in December, so the inventory is down, but it is ready to jump. We're going to see a lot of product come on in January. So consumer confidence, we see a very optimistic consumer there about the upcoming market, and people are ready to start getting active again. If we look at the buyer demand, and tied in, of course, with employment, we can see that employment has been continually increasing over the last couple of years. That's good news. Retail sales, of course, are up throughout BC, and unemployment, we are at Canada 5.8%, and provincially we're at 5.3%. So not a big change there, a little bit of an increase nationally, but nothing substantial. And if we look at the inflation, there's our friend Tiff back east. Canadian consumers are pulling back on the spending. Unemployment is slightly up nationally, as I mentioned, and the economic growth has slowed to a crawl. So that's a golden star, big check mark there on inflation. And if we look at the 12-month change in the CPI, you can see we had that little peak, and now it's coming down again. So good news. Inflation's now at 3.12%. Not much of a change, 0.02% from last month change, but pretty well the same. And if we look at that overall trend of inflation, you can see that's where it was really crazy in 2022. I think we hit almost 8%, if I remember correctly, for the overall inflation rate. Our target's 2%. We're at 3.12. So very, very close. Very optimistic on that end. And hooray, it's working. So if we look at how we're doing with respect to the Fed, south of us, they're at 3.1%, we're at 3.12%. That's really good news because we want to be in sync. And of course, the Bank of Canada, Tiff Macklin, says we're getting close to the bank's target. And he said the bank might begin considering rate cuts in the coming quarters. So the talk of the town or the talk of the country is that that's going to happen in spring. So that's the big light that everyone's seeing. We're all excited about it because if they do start cutting rates, and it's highly likely they will because our economy is so slow and inflation is returning to its target, it's probably going to happen sooner than we thought. And that's all good news for us in the market and the consumers. So it's now in sight. And again, things are working. So their fiscal tightening policy has actually had good results. So rental rates is something we look at, and it's impacted by inflation. You can see we hit our peak of rental rates back in September, and they have actually come down a little bit. So that's good news for tenants, people renting. The cost of borrowing, again, was at an all-time high about 18 months ago, and now it's kind of scattered down and will come down further as we are at that peak still here. If we look at the 5-year rate, the variable rate, it looks like the transition point, it could even be as early as February. We're already starting to see some 5-year rates at around below 5%, which is really good to see. And we're starting to see that 5-year rate drop potentially very, very quickly as soon as that Bank of Canada starts to drop their rates. So we're watching this closely. We don't know exactly when it's going to happen, but it's looking pretty promising for this spring. So let's keep an eye on those forecasts for the mortgage rates and what the bank is doing. Another big factor that I anticipate changing quickly is the inventory. If we look across BC, you can see that inventory has increased across BC, but not in Greater Vancouver. If we look at West Side houses, you can see the inventory has dropped. Again, typical for December. It's not untypical for that inventory to drop down in December. That's the same for attached inventory for the West Side. I've had some of you ask for the inventory trends for the East Side, so I'm including that now. Houses on the East Side, you can see big drop in inventory from 475 houses down to 310. An attached product on the East Side dropped from 480 down to 325. So we're really low in inventory. There's a big demand. It's going to be a busy January. You can see that happening. So what's next for prices? In conclusion, our real estate market, as we know, is directly impacted by mortgage rates, inventory, and consumer confidence. Unemployment rate is up. That's actually a good thing. Economy's slowed down. That's actually a good thing. Inflation's behaving, 3.12%, phenomenal. Bank of Canada is holding the overnight rate steady and is forecasting some coming drops. And of course, listings are lining up for 2024. We have many clients getting ready to put their property on this month and next month, and that is a good sign for inventory increasing. So the mortgage rates will remain high for the short term, but the recent good news on inflation will be enough to prompt rate cuts as early as this spring. That's good news. My prediction, a robust market for 2024 with prices beginning to increase as early as this spring. So watch for that. So overall, expect a very different market for 2024 as the rates drop, as the inventory increases and provides more selection for the buyers to jump into the market. And when the sellers see that, of course, they'll be putting their home into the market as well. It's all tied together. That's what I'm predicting for 2024. Fasten your seatbelt. It's going to be a fast ride. That's my update for January 2024. You can watch these videos on YouTube, Facebook, and Instagram. And if you're into podcasts, we're on Apple Podcast, Spotify, and Google Podcasts. Thank you very much. And I wanted to wish all of you a year of happiness, good health, and great success. I'm Marty Pospisil. That's my January 2024 update. Thank you very much for joining us.